Hey guys, welcome back to the Property Tank. Pumped for today. Today we're talking about what land tax did to investors last year in 2024. And now what we've seen from when the land tax got increased here in Victoria to now what we're seeing now and what that's done and where's the opportunity lie for people moving forward. So keen to get into you guys with that. Please remember, if you're looking to do a knockdown rebuild or dual occupancy or multi-unit development site, book a consultation below. Come say hello on Instagram. Lots of good stuff happening over there. And make sure you become a little fish in the littlefishnetwork.com.au. Heaps of great stuff happening in there. It's Australia's best property community and it's free. Get on board. All right, guys, let's get into the episode. All right, guys, let's talk land tax. In 2024, they increased the land tax here in Victoria, and it definitely made a splash. Land tax is there for investors. It's not for your owner-occupier. That's exempt. Great. It's there for investors, people that have an investment property. So just an example, if a property, the land value in the property was worth, say, $500,000 in 2023, the tax for that was around $770. The following year, when the tax increased, that same property with the land value valued at $500,000, it's worth around $2,800 per annum. So a massive jump. So for investors that have a property, and remember guys, these are extremely rough numbers because this stuff's super hard to calculate, but it's going to get you heading in the right direction, okay? Because a lot of different factors, the property's value, which when I say property, I mean land. It's the land that gets valued and then taxed, but also how many properties you have in that particular state. So we're talking about Victoria. Victoria got smashed pretty hard, but any state, all states have the land tax. The more properties you have, the higher rate you will get charged. But make sure you do your own research on each state because it does vary from state to state. I believe Canberra has a set fixed rate, so they all sort of use it differently, I suppose, and implement it differently. So for the investor that owns a property or two, trying to build their portfolio, potentially their land tax is 4x'd in a matter of 12 months. So instead of getting maybe a $700 bill, maybe, or a $1,400 bill, they're now getting bills for $3,000, $4,000, $5,000. So it's a massive jump. So if we've got investors that are really struggling to pay those bills, what do? They sell that property because it's too hard to hold and make those repayments, especially with cost of living going up as well. That's what we've seen in the last couple of years. Cost of living pressures going up. People that have those investment properties, land tax bills come in just too hard to keep up those repayments. So what do? They sell those properties. And that's what we've seen in the last 12, 18 months. And that's what they tipped. And now we sit here in the middle of 2025 and we can say that people have sold, those investors have sold because they've been scared off by the land tax. Now, the number around that over the last 12 or so months has been circa 24,000 homes have transacted and essentially investors have left Victoria, which means investors own investment properties, which they rent them out to that rental market. And that's dropped by 24,000. Here in Victoria, it's estimated around 24,000 rentals are now not there, are now not on the market. So essentially, you have your supply-demand metrics. The supply has drastically dropped as investors have left Victoria in droves. So what does that do? That's going to increase rental yields. That's increasing the rents. Now, the rental yield year on year has increased here in Victoria. I think circa Bonnie maybe 3.3 to 3.7, 3.8. So not huge moves, but definitely for a slow moving number and slow moving metrics, that is heading and creeping into that direction where investors are going to start to listen. And as we know, we've had stagnated property prices here in Victoria. So what's going on there? So we've got stagnated property prices and we've got rental yields ticking up. So what we are seeing and what we are hearing, guys, circa 24,000 rental properties don't exist in Victoria where they used to. And when we've got reasonably strong immigration numbers, people are looking to rent somewhere. So that's pushing rents, like I mentioned, and we are seeing yields creep up silently. And we're seeing property be quite flat here in Victoria. So land tax did what it was supposed to do. There's no doubt they brought it in to try and pay down their debt and increase taxes, because that's what they do. But also they wanted to see a shift of owner-occupiers and maybe first home buyers getting an opportunity and having a point of difference and having an advantage in the marketplace against investors. And that's what we've seen. So we've seen more owner-occupiers take up that stock, which has then had the effect on the rental market, and we're going to see rents go up, because these things take a while to shift, take a while to correct. So what we're seeing is we're seeing immigration coming in, we're seeing the supply of rental properties shift downwards. So that's going to push up rents. So that's where investors start to notice and go, all right, cool. What does Victoria look like from a yield standpoint? But also Victoria as an opportunity to invest and maybe look at the capital growth scenario as well. So what we're going to see, and what I'm tipping, we're going to see investors coming back to Melbourne. Now the land tax still exists. Okay, it's there, it's fine. But it's more so when people get into these investments, they understand the land tax that they're going to enter in on, and they understand the costs, they understand the rules of engagement, and they factor those costs into their numbers before they buy, and then they wear that tax, and it's not that big of an issue. What we saw in 2024 is investors get slugged with this tax that they weren't expecting, and it's not factored into their numbers. It's not in their spreadsheet. So how do they deal with it, especially when we've got cost of living pressures going up and interest rates going up through that time? So everything got tougher from all different angles. Now we're seeing flat property prices in Victoria, rental yields be strong, vacancy rates super low, and we've got interest rates coming down as well, tipping circa another % over the next 15 months. What we're seeing is immigration coming in, the supply of rental homes going down, demand going up. And as we know, supply demand, things will shift. And the fact money's getting cheaper will mean that people that are potentially looking to get involved in an investment property, it's probably a good time, especially when the numbers are flat and the sales are flat. So you get in, buy something, things get cheaper, holding costs get easier, and the capital growth goes up. Because that's the thing, let's be honest, a couple of grand in land tax, I know it's not ideal, but if you get in at the right time and property goes well for you over the 3 to 5 years, that couple of $1,000s per year over 5 years on a property that's maybe increased in value $150,000, you figure it out. So that's the thing. So that's what I think we're going to see. But we're going to see people come back to the Victorian market, but they're going to understand the rules of engagement. They're going to understand what needs to go into their spreadsheet, and they're going to understand what they're getting themselves into. And hopefully we're going to see some capital growth, and those investors, those people that look to act, they're going to be rewarded.
PK, in 2025, investors are coming back. In your opinion, unit, houses or apartment?
Units or apartments? Bonnie, you always ask great questions. This one's an easy answer. Houses, houses, houses.
Why?
Houses appreciate more than units, and the land the house sits on, Bonnie, they don't make any more of that. So you get yourself a house with land, that's king. Now, where you buy that land will have an impact on capital growth, appreciation. Look back at our earlier episodes talking about regional centres, talking about Melbourne, where you can try and get yourself in, talking about what's the main lesson, Bonnie? Transport and access into the places where people want to be. If you can't afford to buy where you want to be, you need to buy where it has strong access into the places where people want to be. And this is what we've seen the historical data suggest. And it just makes sense, which is good. So buying houses, Bonnie, and buying land is king. So if you're looking for an investment property, for me, I would be looking at houses, having a strong land component versus buying apartments or units. Now, the caveat to this is I definitely think there's some good investments in the old school unit space in some of these blue chip suburbs, especially here in Melbourne. You know, you can get into those leafy suburbs, blue chip suburbs, and buy an apartment in an apartment block in circa 10 to 15 units inside the block. Great floor plans, solid as a rock. They got kitchens, they got bedrooms, they got maybe dining rooms, lounges, and they're laid out in a way that's super livable, but in blue chip suburbs. So I'm talking villa units, I'm talking 1 of 10. These type of assets I think are really good. But to answer your question, Bonnie, let's go houses, let's go land.
Hey PK, what is your experience with the land tax for our clients?
Yeah, great point, Bonnie. I just mentioned a smaller example there, I suppose. But as you're getting into higher property prices, and if you're talking about companies and trusts owning property, these rates go up further. To answer your question, Bonnie, we've got some development sites that when the land tax bill comes in, it's a $20,000 fee. So it's definitely a real thing. So it's become more important than ever to smash that development cycle out and see as minimal years of land tax as possible. And that's the thing. Obviously, in the development side of things, we turn the properties around, we activate them, and we sell them off and we move them on with that strategy. So sitting and holding, I think definitely if that's your strategy and you've got enough rental income to absorb the land tax, I think fantastic. Some people definitely need to look at it because it does get pretty chunky, and you need to definitely talk with your accountant who's across these things and make sure you're geared up to suit your needs and your strategy. All right, guys, let's wrap this up. In summary, land tax, it's a thing. As taxes come in, they never really leave. So people are going to have to deal with it. But what we're seeing is we've seen a market correction based on it increasing. And now what we'll see is investors coming back, factoring those costs in, enjoying that capital growth over the next 3 to 5 years as we've seen a flat market. Enjoy that. Rents go up, rents help pay for the land tax, and it all works itself out. But here's the opportunity, because we've had the exodus, here's the opportunity in Victoria for people to enjoy that growth and increase rental yields. All right, guys. Thanks for hanging around this long if you've hung around. And remember, knockdown, rebuild, dual occupancy and multi-unit development sites. Please book a consultation. Come follow us over on IG, Peter Kelly Official. We're dropping stuff there every day, staying very agile. And make sure you become a fish. littlefishnetwork.com.au. It's free. So much value happening in there. And it is off and running. So make sure you get in there. Thank me later. Have a great week in property. See you next Monday.